Sofi Technologies reported fourth quarter earnings and 2023 earnings results today that sent the stock price soaring as much as 21% after the news came out. So what was so good about Sofi's earnings results that sent the stock price soaring? Was that increase justified, or is the stock price overreacting to Sofi's earnings? I'm going to answer those questions and more in this video reviewing Sofi's fourth quarter earnings results. So join me and let's analyze these figures.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so for the 3 months that ended December 31st for Sofi, total revenue increased to 615.4 million. That was up from 456.7 million for an increase of 35% in the fourth quarter. For the full year, revenue increased by 35% to 2.122 billion. Sofi did achieve net income on the bottom line, profitability on the bottom line, like management forecasted. So kudos to the management team for forecasting fourth quarter profit and delivering on their forecast. I give management teams credit when they tell investors they're going to do something and they follow up and actually do what they said they're going to do. Not all management teams can actually achieve that feat. So kudos to Sofi. 47.9 million in net profit, following 40 million in losses in the fourth quarter of 2022. For the full year in 2023, they still delivered loss on the bottom line, net loss of 300 million. That was better than the net loss of 320 million for the full year in 2022. But management told investors something really good about profitability going forward. You're not going to want to miss that. I'll share that with you a little bit later in the video. More good news for Sofi in that total deposits increased by 2.9 billion, up 19% for the fourth quarter to 18.6 billion at year end. Remember, Sofi only recently received their bank charter and started taking deposits in their checking and savings, and they've already grown very nicely in this regard. What's attracting people to Sofi is the easy to use website and app, and the fact that they offer a industry leading yield on deposits. So if you deposit your money with Sofi, you actually earn some money for your savings, whereas other banks like Chase and Bank of America and Wells Fargo, they hardly offer anything at all to keep your money with them in the checking and savings account. So for that reason, they've been slowly, well, I shouldn't say slowly, they've been attracting billions of dollars in deposits from these legacy banks, and they've continued this process. The legacy banks have been slow to react to this strategy by Sofi. They've just kind of sat back and said, we're not going to do anything just yet. They don't want to counter by offering a higher deposit rate themselves, because that's really costly. And if you think about the hundreds of billions of deposits that some of the legacy banks have, that would be a massive cost to their profitability if they were to offer that to all of their customers. So for now, they're not reacting aggressively to this market share move by Sofi, but that doesn't mean they're going to sit back forever and let Sofi continue to take market share. They might have a red line. They might have a point where they'll say, okay, now we're going to react and we're going to try and stop these losses from customers moving over to Sofi. And more than half of newly funded Sofi money accounts are setting up direct deposit. Direct deposit accounts are the most lucrative bank accounts industry-wide. So if you think of most consumers, some have more than one bank account, and they primarily use one. If they have multiple bank accounts, one is their primary account. That primary account is the most lucrative one because that's where direct deposit comes in. That's where people use it to make their monthly bill payments, and that's where people use their debit card to make purchases, and thereby that is a more active customer. That's a customer that is more profitable and more lucrative for the bank. And so that's why when Sofi goes after customers, they're going after customers that are setting up direct deposit, which I think is a good strategy. I mentioned that Sofi is attracting many members, and in the new In the current quarter, new member additions totaled 585,000. That brings their total members to over 7.5 million. That was up by 2.3 million in the year. Very nice growth in members, 44% year over year. Okay, all that said, it wasn't all great news for SoFi. One notable risk rose during the quarter, and that was the default rate. It looks like the personal loan portfolio, which I have been highlighting for more than a year now, is a increasing risk for SoFi. And you could see from September 30th to December 31st, the weighted average annual default rate increased from 4.6% to 4.8% in just that short amount of time. Now, this is something I've been highlighting for SoFi stock investors to keep an eye on, because SoFi has become predominantly a personal loan lender. I'll show you in a little bit. Most of their loans, a vast majority of their loans, are personal loans, and you can see the default rate on these personal loans is increasing. That's a little sneaky risk that I don't think very many investors were paying attention to in the current quarter's earnings results. Given how much the stock price increased, I think this part of its earnings report has been neglected so far. And if you look at the quarter, you look at the loan origination volume in the 3 months ended, their personal loans, again, 3.22 billion in personal loans, for total 4.3 billion. So more than 3.2 billion out of the 4.3 billion. So roughly 75% of the loans that they originated in the quarter were personal loans. Student loans thankfully started increasing again after the end of the student loan moratorium by the government. That's been good news. The student loan business is rebounding. Hopefully this continues. And the reason for that is people default less on student loans than they do on personal loans. Way, way less. You can see that here. Student loans, look at the default rate, 0.6%. Even though that was up from 0.5%, look at the difference, 4.8% and 0.6%. That means more than 99% of people repay their student loan, whereas roughly 95% of people repay their personal loan, according to SoFi's weighted average annual default rate. And this is accounting for already the fact that SoFi only goes after the highest quality borrowers. They talk about how their average account has a credit score of over 740 and all that. Still, 4.8% annual default rate according to their calculations, and a big difference, more than 8 times the amount of student loan default rate. So as a SoFi stock investor, you should be happy to see the student loan portfolio growing much faster than the personal loan, and the home loan portfolio also growing as a result of the acquisition they made of the home loan mortgage company in 2023. Although quarter over quarter, there was a decrease here. So let me show you the more detailed look into their loan portfolio. What you'll notice here is in the fourth quarter 2023, lending decreased significantly. Loan origination decreased from 5.16 billion to 4.3 billion quarter over quarter, and all categories decreased. Even home loans surprisingly decreased from 355 to 308, and the personal loans decreased from 3.885 to 3.22, and student loans from 919 to 789. So all categories decreasing, and I wonder if this is SoFi adjusting to the higher default rates. I wonder if this is SoFi management looking at the increasing default rates and saying, whoa, we better stop lending, or we better reduce lending, because it looks like people are having difficulty paying these loans. It might just be the beginning, or it might be the start of a worsening trend. So let's be careful and reduce the amount of loans we're originating right now. So it's too early to tell, but given the forecast, which I'll also share with you, that management talked about for the full year 2024, I think it's the beginning of a trend. I think it's the beginning of management pulling back on lending because they're observing increasing risks in this regard. So the best part of these earnings results, in my opinion, were management's guidance for 2024 and beyond. So, management stating that for the full year, they expect to achieve GAAP net profitability on the bottom line of roughly 100 million for 2024. So, the 1 quarter of profitability in Q4 2023 was not a fluke. They expect this to continue for 2024 and beyond. And management saying that the EPS of 7 cents to 8 cents in 2024 will soar to between 55 cents and 80 cents by 2026. So, not only profitability for the bottom line in 2024, but multiplying higher over the next few years. And in my opinion, this is what drove SoFi's stock price higher, because the actual quarter's results weren't all that phenomenal to justify a 20% increase in price. But the guidance, these earnings guidance, I think is enough to justify that explosion in SoFi stock price. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.